day and welcome to Skipper Limited Q3 FY2024 earnings conference call hosted by Ambit Capital. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Satyadeep Jain from Ambit Capital. Thank you, and over to you, sir.
Thank you. Hello, everyone. Welcome to Skipper Limited 3Q FY24 earnings call. On the management side today, we have with us Mr. Sharan Bansal, who is the Director, Mr. Shiv Shankar Gupta, the Chief Financial Officer, and Mr. Aditya Dujari, GM Finance and Investor Relations. Thank you, and over to you, sir, for your opening remarks.
Thank you, Satya. Good afternoon to all of you, and thank you for your continued interest in Skipper. Please take note, any forward-looking statement made during this call must be reviewed in conjunction with the risk that the industry and the company face. Some of the key operational and financial highlights in comparison to the previous year quarter were as follows. I am pleased to inform you that the company registered its best ever revenue quarter of rupees 8015 million against rupees 4448 million in previous year quarter on back of strong performance across all its major business segments, achieving growth of 80% over previous year quarter period, while maintaining healthy operating EBITDA margins of 9.6%. The segmental revenue breakup were as follows. Engineering 5177 million, up by 54% over previous year quarter. Polymer at 1086 million, up by 11%, and infra segment 1753 million, up by 1672%. The company engineering export sales were at 1023 million and constituted 20% of overall engineering segment revenue. And Y2 debt export sales were at a level of 4369 million, constituting 29% of overall export engineering revenue. The company achieved its best ever quarter revenue in the infra business, fueled by robust execution, BSNL, and other T&D projects. Our revenue surged by an impressive 16.72 times compared to the previous year quarter. We foresee the similar momentum to continue for next quarter also. Years of dedicated effort towards building a robust retail distribution network for our polymer business have now started showing encouraging results. Polymer business achieved its best ever 9-month revenue performance. Revenue increased to 3491 million against 2572 million in the previous year 9 months, up by 36%. Polymer sales volume increased to 24654 million metric ton against 15454 metric ton in the previous 9-month period, registering a growth in volume of 60%. Our Skipper Pipes brand campaign as India's safest pipe with brand ambassadors MS Dhoni and Chris Gayle is paying rich dividends. Higher growth witnessed in campaign markets indicating campaign effectiveness. Company intends to increase its campaign spread to other geographies as well as open new markets in the coming couple of quarters. Our quarterly operating performances were as follows. Reported EBITDA increased to 770 million and operating margins stood at 9.6% for the quarter. The engineering segment EBITDA margins for the quarter stood at 11.8%. Going forward, we expect similar trends to continue and deliver consistent margin performance in this business on back of better quality contracts getting executed and rising share of international business. The EBITDA margins for polymer and infra business will continue to get benefited from fixed costs being rationalized over larger revenue growth. The management focus continues towards bottom line improvement. The consolidated PBT increased to 291 million and PBT margin at 3.6% of the sales for the current quarter period against 118 million in the previous year quarter with PBT margin of 2.7%. The consolidated PAT increased to 205 million with a PAT margin of 2.6% of sales for the current quarter period against 95 million in the previous year quarter with PAT margins at 2.1%. Order book and inflow. On the order front, during the quarter, company secured significant size transmission tower export contracts from Middle East Asia and several other T&D projects, both domestic and international, including telecom. The total inflow for the quarter was in excess of 4,000 million, with export inflows constituting 40% of the total inflow. In 9 months, we secured new orders in excess of 31,450 million rupees. The current order book currently stands at 57,790 million and is well diversified across sectors and segments. The order book to engineering and infra segment sales now stands at 3.7x of FY23 sales, giving us revenue visibility for the next 3 to 4 years. The domestic T&D environment looks vibrant and the company is committed to leverage and address the vast potential of India's transmission sector with its integrated operations. With the government's accelerated efforts towards scaling visual grid infrastructure and improving electrification in urban and rural areas, Skipper is poised to support this growth. Further, on international front, companies witnessing a surge in global inquiries and getting benefited from China Plus One trend. The company will continue to get benefited from the pent-up demand as the global economy opens up and global focus and investment on building T&D infrastructure catering to renewable continues to grow. Also, the company looks forward to tap emerging opportunities in sectors aligned with the government's rising interest. Skipper's rising diversification into the business of telecom, railway electrification, water EPC, and drip irrigation have tremendous potential, aiding to strengthen its revenue stream. The tender pipeline for us to participate looks deep, and the current bidding pipeline are at their all-time high level of 150,300 million, with international share at 98,300 million and domestic at 52,000 million. Also, I am happy to share that the company is in advanced stages of negotiation to secure some good-sized international and domestic contracts. And coming on to this right issue, just wanted to brief you all. Further, we are pleased to announce the successful closure of our right issue offerings. The right issue received a strong response from both our existing shareholders as well as from other investors and witnessed participation from both domestic and foreign public shareholders. The issue was oversubscribed approximately 1.77 times. The success of our capital raise is a strong demonstration of the confidence that our existing shareholders and new shareholders have in the prospects of the company and underscore their belief in our abilities to leverage the growth opportunities offered by the sector. This infusion will help finance our growth ambition and will allow us to emerge with a stronger balance sheet and increased flexibility. Thank you. We are happy to take your questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to join the question queue. The first question is from the line of Dhruv Agrawal from Niveshaay Investment Advisors. Please go ahead.
Yeah, sir. Hi. So congratulations on the very good set of numbers. Sir, on the international front, how do you see the demand coming in from the Middle East countries, United States and the North America? And how do you see the competition in those international markets also? If you can name some of the players from whom do you see the competitions and also name some of the Turkish players as well, sir?
Yes, so demand from in a lot of geographies right now is very robust, primarily because a lot of international countries are investing in the renewable sector, renewable power generation. Now, renewable power generation necessarily comes with investments in power transmission also, and which is why we are seeing healthy demand in a lot of markets. Skipper does operate in about 65 countries, and we are seeing decent demand in a number of them. Particularly right now, we have seen good orders coming from Middle East and Australia for our company. And in the future, we are expecting good amount of orders and business from North America and Europe also. In terms of competition, mostly our competition is with Chinese and Turkish players, and some 1 or 2 Indian players as well. So that is the competitive landscape. I hope I answered all your questions.
Sir, can you please name some of the Turkish players as well, like Turkish and Chinese players as well?
Some Turkish players who we regularly compete with are called Mitas and Sara.
Okay. And Chinese, sir, if you can name?
Chinese, I'm sorry, I don't have, their names are a bit complicated. Aditya would be able to share those names with you later on.
Okay. And sir, one more question related to this only. Any impact on revenue due to the Red Sea issue in this current quarter, and also going forward, do you see any issues due to that in the upcoming quarter?
We do have some contracts in which are affected by the Red Sea crisis, particularly in Israel and Egypt. The rest of the Middle East is not that affected by this problem. However, even in these countries, the shipping lines are able to go around the longer route around the Cape of Good Hope and reach their destination. So I think this is, in the short term, we may see some freight increase, only particularly in these 2 countries, in Israel and Egypt. Or in other countries, there will be some amount of freight increase, but our contracts are well able to cover that increase.
Okay. Okay. And my next question is on the finance cost. If I calculate the interest expense in finance cost as a percentage of total borrowing, which includes the long-term and short-term debt, instead of calculating it as a percentage of sales, it is coming close to around 15.7% in the year 23, 16% in year 22, and so on, sir. But on the other hand, if I compare the weighted average cost of borrowing, it is coming close to 10.5%. So why there is gap of around 5 to 6%? Can you please highlight that issue? Am I missing something, or is there anything?
Yeah, we have said at earlier Concall also, the total finance cost is not just the interest paid on long-term and short-term debt. It also includes the interest paid on vendor bill discounting and customer bill discounting. Also, it is inclusive of the bank guarantee charges and margin charges. As you know, in our company, there are a lot of bank guarantees that we have to deal with. So all those charges are part of the finance cost overall in the company. So which is why it is not correct to calculate the overall finance cost divided by the short-term, long-term debt. That will not give the correct picture.
Okay. And sir, just one more question. As the CAE has increased the investment for deploying the transmission infrastructure, including the lines and the substation, close to around 4.75 trillion from 2.44 trillion previously. So can you give some color on how do you see the demand rollout from this increased expenditure, and what kind of market share can Skipper be able to attain from this? And also what kind of margins we can expect from this as well?
Which customer are you talking about?
This year, CAE has increased the expenditure, right, on the transmission infrastructure, right, so from 4.75 to 2.44 trillion.
Are you asking about Government of India's expenditure?
Yeah, particularly from Government of India, yeah.
So, one thing in transmission you have to understand that there is a bit of fair amount of private participation also where transmission investments are concerned. Government of India, makes the investments through Power Grid, but it's not exactly a budget allocation for them. So the transmission market is fairly robust, and there's an active participation from companies like Power Grid, Sterlite, Adani, etc. So they are the ones who are bidding and taking the project. And government essentially creates an enabling environment where they have identified projects of around 2.5 lakh crores to be bidded in the next 5 years to connect 500 gigawatt of renewable power. Effectively, that is what is leading to the growth in demand in overall in India. And of course, international markets, we've already spoken about the connection of renewables, which is driving the transmission demand.
So, sir, my question was only this regarding only what kind of share the Skipper will be able to attain from this. Can you give some guidelines on that?
Well, currently in the segment that we operate in, which is the ultra high voltage segment, the 400 kV and 765 kV in India, we have close to about a 10 to 15% market share, and I think we will be comfortably be able to maintain that.
Okay. Just one last question, sir. Is there any unexecuted BSNL order book out of the total order book that stands in the quarter 3? And what is the share of the BSNL in the current quarter revenue, sir? Can you share that one as well, sir?
I don't have those numbers readily available. However, the BSNL project is going well. We still have around, some quarters of execution left in this contract. So, but I don't have the numbers readily available. How much is executed and how much was done this quarter?
Okay. Thank you so much, sir.
Thank you.
Thank you. A reminder to all the participants, if you wish to ask questions, you may press star and 1 on your touchtone phone now. The next question is from the line of Deepak Parswani from Swan Investments. Please go ahead.
Yeah. Good afternoon, sir, and congratulations for a very good set of numbers.
Thank
so
you.
Firstly, in terms of the bid pipeline, last quarter the bid pipeline was somewhere close to 12,500 crore, and this time it has increased to 15,000 odd crore, whereas order inflow has actually declined vis-a-vis the last quarter. So if you can throw some light, how should we read into it, whether clients are taking little longer time or it's just a normal course in the business? See,
in all the performance metrics of the company, it will be much better to look at it on the annualized basis than on a quarter basis, because quarter numbers may be impacted by a various number of factors, by purely about how many bids are getting finalized in that quarter, which customer is moving how fast. So honestly, if you look at the annual number, we have secured about 3,100 crores of orders so far in the first 9 months. In the last quarter also, looking at the order inflows that are coming in, we are quite confident that we should be close to or exceeding the number of last year, which was about 4,000 crores annually. So honestly, order inflow, etc., is really not a concern. There will be continuous robust inflow of orders continuously for several years.
And since you did mention regarding we are also at advanced stage of discussion of some of the orders. What would be the typical ticket size of these orders? If you can throw some light on that one.
For major contracts, anywhere between 200 to 400 crores is, on a per contract basis. That is the order ticket size which we are targeting.
Okay. And sir, in terms of the debt level, what was the debt level at the end of this quarter? And also, if you can throw some light on the working capital cycle as well.
Debt level at the end of quarter 2 was approximately 700 crores, including long-term and short-term debt. We have not published the numbers of quarter 3 debt as the requirement is not there. And in terms of the working capital cycle, we are at about a working capital cycle of 120 days right now.
So, sir, with the proceeds of right issue to the extent of 50 odd crore, would that be fair to assume this quarter again that would have come down to that extent?
The proceeds are yet to be received by the company, as the final allocation of the rights issue will be done hopefully by the end of this week. So we expect the proceeds to come in by next week perhaps.
Okay. And sir, in terms of the capex, how much has been the capex incurred so far?
This year we expect, I think we've invested about 70 odd crores.
Okay. And sir, finally on the pipe business, I mean, on the 9-month basis, again, growth has been pretty strong to the extent of 36%, but if I'm looking at the Q3 level, that has been come down to the 12%. So on an incremental basis, if you can throw some light, how should we look into these numbers?
Yeah, I think overall there's been a very good volume growth in this business. Approximately to the 50 to 60% volume growth we've had. However, top line wise, we've seen slightly lesser growth than that because the resin prices have contracted quite a bit compared to last year. But volume growth is strong, and we expect that to continue to remain strong in the coming years as well.
Okay. Thank you, sir. Thanks a lot, and all the best, sir.
Thank you.
Thank you. The next question is from the line of D. Heerals from Phillip Capital PCG. Please go ahead. D. Heerals, your line is unmuted. You can please proceed with your question.
Yeah, good afternoon, sir. Thanks for the opportunity. Congratulations for the very strong set of numbers. So my question is pertaining to the export side. If I look at our export revenue on a 9-month basis, we have seen a sharp decline of almost 8 to 10%. So any particular reason for that?
The export has seen decline in what sense?
So revenue. Export revenue on 9-month basis, if I look at 9-month FY23 compared to 9-month FY24, we have seen a decline by almost 8 to 10%.
It's just that because the domestic execution is quite strong right now on the back of the BSNL contract as well as the various transmission contracts which we are securing. Otherwise, export execution is in more or less in line with last year.
Okay, so maybe export for the full year. Last year we did an export revenue of 730 crores. So what is the guidance for the current year, sir?
It will be similar to last year's level.
Okay. And sir, as you talked about, so this year our order inflow would remain same as compared to last year. So what kind of growth we are anticipating for next year and maybe for FY26 overall?
See, already, the company about 2 years ago used to secure about orders of 1,500 to 2,000 crores annually. Starting from last year, we have seen good amount of order inflow starting to come in. So now, honestly, in terms of market availability, we don't see a challenge of getting orders. Our capacity will only be the constraint going forward. So we are planning new capex plans, and as we grow capacity, then obviously we can target higher and higher amount of orders also.
Okay, so what kind of capex that we are looking for, maybe for the engineering segment?
We haven't firmed up our capex plan for next year. This year, as I was mentioning earlier, that we have spent about 70 crores of capex, but that has been towards more capacity optimization and debottlenecking. We haven't gone for a capacity expansion till now, which now we are in the planning for both brownfield as well as maybe greenfield expansion.
Okay. And so lastly, in terms of margin, if I look at our margin, we are very closer to the double digit. But maybe by next year, sir, do you expect this margin to be comfortable, say, about double digit, sir?
On a blended basis, I am not sure. We will be quite comfortable with a margin guidance of between 9.5 to 10%. However, incrementally, we should see margin expansion as and when, as our as we get better and better quality contracts in the engineering business, and our PVC business also starts to see better and better margins. So yes, long term we should see margins of 10%, 11%, etc. However, for next year, we would expect margins to be in the similar range.
Okay. Thank you so much, sir.
Thank you. A reminder to the participants, please use handsets only while asking a question and not the speaker mode to ensure the best quality of the call. The next question is from the line of Namish Gupta from Namish Gupta and Company. Please go ahead.
Hello. Sir, my voice is audible?
Yes, it's audible.
Okay. So, sir, my question is regarding margin only, sir. Sir, you are saying that your margin is like, your sustainable margins are like 9.5%, 10% something, sir. Sir, I mean, what I have seen, sir, like from March quarter, we are incremental in each and every quarter, our turnover is increasing, sir. So, my assumption is that on every increase of turnover, there are economies of scale that should play out, and margins should enhance due to that, sir. But I mean, this is not happening in our case, sir. So I mean, can you just clarify on this point, sir?
The turnover is increasing in a mix. You're right that there is some amount of economies of scale that are being obtained also. However, the revenue has been going up as a mix of PVC growth as well as growth in the infra division, which have on a blended basis, the overall margin of the company perhaps is not going up as sharply as what you would expect. We are at a comfortable margin level compared to overall last year. If you look, if our overall blended margin was 9.1%. This year, our overall blended margin is about 9.8, 9.9% already. So we have definitely had some amount of improvement overall in terms of economies of scale, etc.
Okay. I mean, is it due to some kind of mix that you are not getting some high value order, or like your fixed cost percentage is very high that we are not getting the economies of scale, sir?
No, that's not the case. As I mentioned, that you will have to look at margins on an annual basis. Last year, the overall margins were about 9.1%. This year, on a 9-month basis, we are at 9.9%. So obviously, margins have gone up.
Okay. Fine, sir. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Rusmik Oza from 9 Rays Equi Research. Please go ahead.
Yeah, thanks for the opportunity. So I want to understand, you have mentioned in the presentation that you aim for growing at 25% CAGR in terms of revenue for the next 3 years. So just a clarification, is it from FY24 or on FY23 numbers, sir?
It is on the FY23 numbers.
23. So, because I'm asking the question because this year, I think we'll end up growing at around more than 50%. So does it mean that actually, because if I compound at 25% for FY23, then you go to around close to, say, 3,800, 3,900 crore by FY26. But then that reduces the next 2 years CAGR to around 10%, because this year you should do around close to 3,200 crore revenue. So just if I can understand the math, that does it mean that going forward for the next 2 years your CAGR could be around 10-12%, or will it be more than that?
Well, we will be giving next year's guidance with the quarter 4 results. However, obviously our effort will always be, as we have done this year, about being conservative where the guidance is concerned and outperforming. So as this year, instead of 25%, we have done much better, like you mentioned, at close to about 50% growth. So yes, so our effort will be that whatever guidance we give for subsequent years, we do outperform that guidance.
Okay. Thanks, sir. And since I'm new to the company, can you explain what is the total capacity in the T&D segment and what is the utilization right now?
Utilization in the engineering segment is approximately about 80% right now.
80. And how far can we go in this in terms of utilization, sir?
So there's some amount of enhancement that will happen. We should be close to about 90% in the coming quarters.
Okay.
But I guess capacity will also start going up. Some amount of brownfield capacity expansion will also start happening in subsequent quarters.
Okay. And in terms of polymers, sir, our capacity is around 62,000. 9 months we have done around 24,000. That means we should do around close to 33,000 for the year. How do we see the utilization levels over this going up in the next 2 to 3 years?
As our, of course, we do have capacity in this business. Here capacity is not a constraint. As the market is opening up for us thanks to on the back of our ad campaign and our dealer distributor network. So I think as our brand is getting more and more accepted in the market, volumes will continue to grow. And like I said, the capacity is not a constraint in this business for us.
Okay. I have 2 more questions, sir. One is on the same T&D. Since the utilization level is 80%, is there any expansion plan in the foray for the next 2-3 years going forward?
Yes, surely. There will be expansion plan. We will be planning both brownfield and greenfield expansion.
Okay. Any capex figure would you like to give for this?
Not right now. We will be sharing it along with the Q4 numbers.
Okay. And my last question, sir, is on the tax rates. We're paying around 33% tax on PBT. When do we shift to the new tax regime, or we'll continue with the same tax regime for some more time?
We expect to move to the lower tax regime next year.
Next year. So from next year, you can expect 25% instead of 33%, right?
That's correct.
Yeah.
Okay. Thank you so much and best of luck, sir.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next follow-up question is from the line of Dhruv Agrawal from Nivesha Investment Advisors. Please go ahead.
Yeah, thanks for the follow-up. So in the last call, you said that over the years, the H1 revenue in relation to the total revenue is 40%. So in the first half, the revenue was around 1327 CR. So if you do the back calculation after considering the quarter 3 sales, it comes close to around 1,200 crores. So are you confident to do in the quarter 4 of around 1,200 crores sales?
No. How did you calculate 1,200 crores?
So generally H1 revenue is 40% of the total revenue, you said in the last call. So I just did the back calculation, like 1327 divided by 40% minus this 9 months revenue. So it comes close to around 1,200 CR.
So the first 6 month revenue was
1327.
1327. Okay.